Thank you for visiting stockmarketfunding.com. We're going to give you a lesson on direct access trading. Direct access trading is you're directly to the market. It's not like a discount online broker that most of you are working with. This is direct to the floor of the market. And ECNs and market makers are in here, and there's a real talent in understanding what's going on in here. Because a market maker is a buyer and a seller on both sides of the equity. And basically, this side here where my pointer is where they're willing to buy. This side is where they're willing to sell. And there's this 537.92 is a stuck UBS. That's a market maker. He's a stuck bid there. So it's 586 right now by 586.18. What they're going to do, if they want to drive a stock down, this side, they will just walk away, and the people that are willing to sell at this price, so there's a gimmick to knowing what they do. And basically, they could walk away from here and sell the lower price down here. Now, if a market maker is going to walk the stock higher intraday, he will take this side and pop right in front of this side and walk that stock. That's called propping the bid. And basically, they prop the bid, and then people feel they're going to miss out, and then they'll start paying the higher ask. And then that's when you go up intraday. So, direct access trading, the fine art of interpreting what the floor traders are doing. In this case, they're market makers. And they're any stock with the 4 symbol there is a market maker. So there's a bunch of market makers trading the same stock. Another thing about this business that you don't know about, and you can always visit us at a later date, and we'll be happy to tell you about it, is that they're trading the firm's order book. So someone from Goldman Sachs firm is down there as a market maker. They've got all the order flow that comes in to the firm. They shoot the orders down to the market maker, so other than the market maker being a buyer and a seller, and they're going to buy those shares cheaper and sell them to you and make money off of you. Here, when you're direct access, they can't do that because you're direct to the market. You're no different than the guy down on the floor. Your execution right here is the very same as theirs. There is no difference. So when you place an order through Scottrade, SureTrade, TD Ameritrade, whatever it is, those discount online brokers, is that the market maker, so if there's 5,000 shares to be bought at a certain price, market maker will drop it down and then fill those orders and then send them back. And 3 days later, they have a 3-day settlement date. There's a lot to talk about this. So basically, if he filled the orders down here, he owns it. But you've got a limit order to buy at 90 cents. Let's say you want to buy on the way up, on the breakout here. And there's a science to it. It may sound confusing on this tape, but if you come back and visit us at stockmarketfunding.com or call us today at 702-685-0772, you will master this. Hold on 1 minute.